Well, g'day there traders and friends, market participants and enthusiasts right around the world. You are here with James on behalf of Pivot Point Trading as I sit down and bring you a late Wednesday evening market recap. It is the 7th of December 2016, and having a look at today's price action, we have seen again a very strong upward bullish continuation to the most recent backtest of that old resistance as new support. You can see our first entry over here at 2,204. We had a secondary entry positioned over the weekend coming in at 2,216. We weren't quite sure if this retracement, or at least the retest of that old resistance area acting as new support, was going to at least open up the door to a larger correction, a bigger pullback, a deeper pullback. However, that has been proven not to be the case. Given, of course, we use contingent orders, we have been able to jump on board with this most recent breakout on the S&P 500. The Dow Jones Industrial Average has more or less gone parabolic, which is very, very interesting to note. The S&P, as you saw on the previous screen, it set up what we call a bull flag, and we were talking about this over the weekend, but if you look at my chart at the moment, this is the Dow Jones Industrial Average. There simply hasn't been any pullback since the most recent breakout. Again, this is going back to about mid-November when the markets were retesting that resistance area. The Dow Jones Industrial Average has since broken above it, and there hasn't been a slowdown really whatsoever. We have seen a couple of trading sessions or consecutive trading sessions where we have somewhat stagnated. However, given of course the rally which we've seen continue since this little short stagnation, this little consolidational pattern, it really looks as though the Dow Jones Industrial Average has gone into sort of a parabolic mania sort of phase at the moment, where people are just jumping over one another to get in on the Dow Jones Industrial Average. Today we closed up just under 300 points. Volume, as at the current print, looks very, very strong as well, which is interesting. We're not seeing that sort of collective agreement across the board when we start to dissect other markets, which I'm going to speak about soon. But again, the Dow Jones Industrial Average acting very, very strong. You can see the exponential moving averages. We're pushing away from that 10 exponential moving average once again, which is somewhat rare. And given, if we look at how extended the ADX is, we're printing just shy of 75. So if you pay attention to this figure on the bottom right hand side of my screen, I have to zoom out all the way. I'll see how much data I can bring in. We can go back to 2010, and the last time, the only other time which we've seen the ADX sort of up and elevated around these current levels was when we saw that short-term intermediate top dating back to 2013. So really at the moment, okay, there's no argument whatsoever that the markets are not bullish. However, if you're not positioned in the market at the moment, I'd strongly encourage you to reconsider if you are looking to jump in, say for instance on Thursday or Friday. There's a very good chance that the bigger portion or the majority of these recent gains are already sort of baked into the pie. And what we'll be looking for again is a slowdown to take place in the Dow Jones Industrial Average. I know it hasn't happened, but again, given of course that ADX reading, this is something that, which I just showed you looking back to 2009, 2010, we've only seen it at this current peak on one other occasion. What happened next? The market itself moved into another stagnant, range-bound type of trading environment. Now again, I'm not encouraging that, I'm not sort of supporting that, I'm not championing that. For me and for people in pro and people who actively trade the markets, we all want a major directional conclusion to what we've seen 2015 and 2016 be a rather stagnant sort of sideways moving market, given of course, or not including this recent breakout which we've seen to the upside. Now again, I hope this continues, but in the sense of reality, things don't move like this forever, and you have to again sort of sit back, digest these gains, appreciate them for what they are, but be open enough to at least expect some form of material slowdown, if not a complete correction, back down to these lower levels once again to digest some of this blow-off mania which we're seeing at the current juncture. It really took me by surprise, Wednesday's trading activity. I've got some open positions to the upside, but this is where it starts to, in many ways, break down, or at least not really confirm at this particular point. A lot of the tech companies which have led this rebound post the GFC in 2009 are simply not confirming the recent moves. And the easiest way to show you this is the NASDAQ. Here we are. Here's this specific market. And again, I've shown you the S&P. I've shown you the Dow Jones Industrial Average. There's no debating whatsoever. There's really no contention around the fact that, of course, they are trending bullish. They are breaking out to new all-time highs. However, the one market which seems to not be doing that at this particular time or this juncture is the NASDAQ Combined Composite Index. Now, as you can see, we're coming back up to the highs which we made in late November 2016, and a lot of the big tech titans, the big tech companies, are still in a sort of precarious type of technical picture or technical snapshot as to which direction they are going to break. Now, given of course that the Dow and the S&P are confirming to the upside, so is the Russell and the transportational average, I assume that over time the Nasdaq is going to follow suit. However, in the short term, given of course that the Dow is so overextended again, overheated, and we've moved into this type of mania parabolic move, which we've seen again continue through Wednesday's trading session, I am open to the fact that Nasdaq may try and slow down, stop around these current levels, 5,400, more or less where we're currently trading at, which sets the tone in many ways for a lot of these tech companies, which are still quite weak, if not still at their respective resistance areas or their respective pivot points, which is setting up some incredible trade opportunities if in fact they decide to play out. Now, a number of weeks ago, I was speaking about the NASDAQ 100, and I was sort of referring to it as the golden key moving forward. If I can bring it up correctly on my chart right now, I'll have to zoom out and show you this. The NASDAQ 100, again, it still hasn't confirmed the move, which is somewhat interesting. Again, it takes up, or at least it is encompassed, with obviously tech companies, the biggest 100 companies. But as you can see on this chart right here, we're still struggling to break above 4,875. I've had this red box drawn since this particular date over here in early November. So although we've come up 3 times into it, we've come up once and failed, 2 times and failed, this is now the 3rd time. Again, Wednesday's candlestick is very, very promising. It's a strong long day bullish Morobozu candlestick, again coupled with very nice strong price action which we've seen on the S&P and the Dow Jones Industrial Average. It's still not confirming this recent breakout. In fact, it's looking rather weak, and if we zoom out, we can see again some, or at least a rather ominous sort of terminal reversal pattern setting up. But again, it's a long way away from confirming. We're still looking at price action if in fact it is to trigger, and if it is in fact to confirm, at least coming down to 4,609. Looking at this market and looking at the Nasdaq, given of course that we have exposure to the long side in other markets, it's just as easy at this particular time to jump bullish on of course the Nasdaq 100 if in fact price can overcome resistance areas as the industrial average has, as the S&P 500 has, and start to get some really nice strong closes, consecutive closes above 4,974. So again, those videos that I released a couple of weeks ago, they are still very relevant. They are very pertinent to the current trading environment that we are in. Again, markets, or some markets themselves, have continued to break out of those resistance areas, whereas the Nasdaq and of course the Nasdaq 100 still really haven't given us that confirmation signal which we're looking for. And of course, a lot of tech companies, the big widely followed tech companies, in many ways are just not participating as actively as what they once have in this most recent breakout. So there's a few red flags, but on a whole, again, given the price action which we've seen and some of the volume signals that we continue to see, it looks rather healthy in the face of a with no real slowdown, no real digestion at this point to at least digest and take some of those profits off the table for some of these mammoth moves which we've seen since the US presidential election. Here we are, 19,550 more or less. In my opinion, it won't be that long until we hit Dow 20,000. That would be quite a milestone. We're only really 450 points away from that. We could see that in 1 or 2 days, but again, you have to keep your expectations and your expectations of reality in check, because this, again, these types of parabolic moves, although they are strong and everyone's championing and cheerleading for the move to continue, it will simply at some point exhaust itself, and that's what you need to be made aware of, and at least to sort of be kept on level footing moving forward. So again, that's just to recap Wednesday's price action. I'm interested to see how Thursday and Friday play out. We are moving towards the end of 2016, and with that comes the seasonal volatility, or at least the lower types of volume readings which we register over Christmas and the New Year. That towards the end of 2015 was met with, again, some pretty harsh selling to start 2016. Things have recovered and we have ended very, very strongly for the year 2016. However, it was painting a different picture in the first half of 2016. It will be very interesting to see how we round out the month of December and begin the 2017 trading year. But I guess we can all agree on at this particular point with that milestone figure, Dow 20,000. I think that's a very strong radar over the next couple of months if we don't get there in December for where the Dow Jones Industrial Average at least is moving short term, or at least in the near term future. So on that note, everybody, it's James signing off on behalf of Pivot Point Trading. Have a fantastic evening. I'll be back with you on Thursday if in fact we see a material type of advancement or any sort of change in the current technical backdrop. But other than that, everyone, have an enjoyable week. I wish you well in your trading. There are a lot of stocks, again, continuing to the upside. A lot of the financials and energy stocks are continuing some of the strong moves which we've seen over the past number of weeks. It is really a divergence from a lot of other sectors encompassed within certain markets. But again, as a whole, the markets are continuing to drift higher in the face of, again, multiple levels of divergence, which, again, you need to be warned about moving forward. So on that note, everybody, I'll see you all most likely tomorrow, actually, and again over the weekend in that pro analysis class. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.